Okay, welcome back, my friends and fans on this page. I know it's been a while. I made a video. I've been quite busy with my, you know, with my trade. I've been very busy with my craft these days. I'm just focused because I'm trying to build my account. My target actually is to build that account to about $200,000 um, in the next 6 months, and I'm doing pretty well. I'm doing pretty well right now, particularly because I continue to research and seek information and to enhance my trading business. So because they say the day you start or the day you stop learning is when you start dying, and I'm not ready to die yet because obviously I love life and I want to enjoy it to the fullest. And so that's why I've been a little bit off the screen. But yeah, here again we are, on a good day like this. Today happens to be Monday, the 29th of November 2021. It's so crazy, the year is running out so fast. Before you know it, it's 2022. So if you've not made money this year, hmm, I don't know. I don't know. I probably would say it's almost too late because what are you going to be doing now? You're going to be running helter skelter. Uh, what you should have done at the very beginning of the year, now you want to do now. I don't know how far that can take you. But for those of us who have been quite busy and our hands have been quite dirty, trying to, going everywhere, seeking information and, perfecting our craft, I give you kudos. Well, I'm going to make this video very short. And I'm going to be teaching my fans and my students alike some very uh, basic yet very profitable trading strategy. It's been a profitable strategy for me for a while now. I kid you not. This is one of my best trading strategy. And for your information, I'm not a swing trader. I'll probably be called a day trader because I trade using time frames. At the least I use 15 minutes time frame, and at the highest I use 1 hour time frame for both my analysis and my entries. So you would call people like me a day trader because I don't want to stay too long in my trade. I want to get in, and after probably maximum of 2 hours, 3 hours, I'm done with, and taking out my profit and, seeing if there are other opportunities to trade for the day. And if there is none, I turn off my computer and I call it quit for the rest of the day. That's how I trade. And because of my trading pattern or my trading ideology or what you would call a trading culture, me being a day trader who is not a swing trader, because swing traders do a lot of analysis. They do what we call top bottom analysis, starting from sometimes even monthly time frame and doing the analysis all the way down to 1 hour before they are able to really lay their hands on entering the market. But for people like me, no, I don't think I have that kind of skill or time to want to do that. I am better off doing what I'm doing right now. And that's why this strategy only works. Please, it's a caveat. It only works for people who are day traders. It probably would not even work as good for scalpers. Scalpers want to stay on 1 minute, 5 minutes time frame. I am talking about those who trade between at the least 15 minutes and at the highest 1 hour. So these are people this strategy would work for. And what's this strategy? If you look at my screen here, you will see I have these key zones indicated by these white lines. I'm sure you can see my cursor. Yeah, these white lines. This actually is an indicator that I call, or I didn't call it. Pardon me. Sorry, I didn't make that indicator. Yeah, the indicator is actually called. Let me see. What's wrong with my memory now? But pardon me, I will get it right. Yeah, the indicator is called automatic Fibonacci retracement. Automatic Fibonacci retracement indicator. I downloaded it free of charge on my MQL5 platform. Every trader that uses MetaTrader 4 or MetaTrader 5 have access to an MQL5 platform where you can have access to signals from professional traders, where you can get VPS, that's virtual private servers, for your trading, in case you use robots like me to trade sometimes. But I also use robots to trade sometimes. You have access to buy robots, that is EA expert advisors. You have access to buy indicators. Buy indicators or expert advisors, or rent them, or even download them for free, depending on which of these instruments you are seeking for. This particular one was for free, and it is called automatic Fibonacci retracement indicator. And what this does is, because those of us who have not watched my previous video on Fibonacci, the use of Fibonacci retracement, please go ahead and watch that video to understand a little bit more what Fibonacci retracement is all about. You see, I'm a key level trader. I trade levels, and that's why I like to use, either I draw my own support and resistance levels, or I use Fibonacci to achieve the same goal. Here today, I'm going to be showing us how I'm able to use this indicator, this automatic Fibonacci retracement, to identify key zones. All you need to do is to download, look for that particular, I'm going to type it here for those of us who want to put it down. So yeah, I'm going to type it here real quick. So you put it down and search for it on your platform, on your MQL5 platform. It's called automatic Fibonacci retracement. Yeah, here it is on my left hand corner of the computer. Automatic Fibonacci retracement. We all know that in the Forex market, or in the market of assets generally, whether it's Forex, whether it's crypto, whether it's indices, whatever market, as long as it's online, we all know that market your chart shows you a zigzag pattern of candlesticks, or of of charting. It never goes straight up or straight down. It always goes up and down. So if it's a downward trend, you will see your chart making lower low and lower highs, lower low and lower highs, lower low and lower highs, till it gets to the very bottom where it is heading to. And if it's an upward trend, you will see your chart showing you an higher high, higher low, higher high, higher low, higher high, higher low, until it gets to its peak. So, but because the market is not just going straight, it goes up and comes down, goes down and comes up. You see, that short time, that short period of retracement is somewhere you and I as traders can, profit from. We can actually profit from such, back and forth, and that is where the Fibonacci retracement indicator comes in. Every MetaTrader 4 or 5 have this tool. This one I actually downloaded it because it has an alert system, such that by the time the Fibonacci retracement is painted on the screen, I can get an alert. Oh, it's on 60. Oh, it's on 50%. So when that alert, buzzes, then I enter. I want to see what's going on in the market. So that's why I have this, and it looks more like something I can relate to. It looks like a pivot line. Those of us who know what pivot is, and so I like it this way, and it helps me to know the key levels in the market. So even when I do my candlestick analysis, or I'm using an indicator, it can help me to determine a probable entry, level, and an exit zone. So this is what I use my Fibonacci for. So for instance, because I'm going to make this video, I'm trying to make it as short as possible. I hope I can do 15, 17 minutes maximum, or 20 minutes maximum. I don't want to do more than that. Yeah, because I have to get back to work. So what this does is this. So I don't use Fibonacci retracement just by itself. It's an error for you to rely solely on one indicator or one system of trading and you think you got it right. Hell no. You can never. It's risky for you to rely solely on one particular indicator or a way of viewing the market. You have to combine a lot of stuffs. You must understand what market structure is all about. That is your resistance and support zones. You must understand candlestick patterns, the dojis, your double bottoms, your armor, and all that. You must understand all of that, and then also have some very powerful indicators that can help you do a better job at those things you already know. So here on my chart, you will see that I also have the RSI. I kid you not, guys, if you do not understand the power of the RSI, start to read and learn about it right now. If you know how to manipulate your RSI indicator, you will be on your way to consistently making profit in your trade, because the RSI is actually a very powerful tool that can help you to know when exactly to enter the market and when exactly to exit the market. So on my own charting system, all I have here is my Fibonacci retracement indicator that you see here, these white lines here showing me the key zones on my charting platform, and I have my RSI, and the properties of my RSI are this. Let me show you quickly my RSI property, so in case you want to replicate my RSI property. So I have level 65 and level 35. Those are the two recognizable levels I want to use, and I have my reasons for it. But maybe today I won't be able to. I don't have enough time to tell you why I choose to have 65 and 35 as my RSI levels. And I have my input as 14. That's the 14 period. That's my RSI period is 14. That's what I use. So you might want to take note of that. And what else? I guess, yeah, that's it. And then you could choose whatever color you want to use for it. So that's the properties of my RSI. So you see, I have level 65, I have level 35. So level 65 is actually the overbought region, when the market has overbought itself, like the buyers have been in control for a while. So my indicator here, when my RSI period crosses above 65 and then cross back down on 65, the moment it crosses back down on 65, it is telling me the market is about to make downward trend. That is for sure. Once this RSI period crosses 65 upward, and then he makes all the move he wants to make and not go all the way up. It will come back down. The moment it comes back and touches 65, from above, it crosses it at the top here. It crosses it here and is about to come down. At that point, I know it is about time for me to enter the market for a sell trade. That is the time you want to sell. You want to press the button for a sell when the RSI period crosses on the 65 or crosses below the 65 zone. That is the overbought region. So because it is overbought, the buyers have done what they want to do, and now the market is exhausted, the sellers are taking over. That's the time you want to enter the market for a sell. The reverse is the case. If the market comes all the way down and then comes all the way back up and crosses this 35 zone on your RSI, it means the market is on the what? Is on the oversold region. This region here is the oversold region. And because it's oversold, it crosses back to 35, it means the market is about to move upward. Don't get me wrong. Look, the market never goes straight up. It's going to still do those zips, those zigzag, and then finally it will eventually do what you want it to do. And that is why you need to understand the market structure. So when you understand market structure, even when the RSI tells you it's a buy or the RSI tells you it's a sell, you have to understand how to actually plot that buy or sell on the market using the market structure as drawn for you by this automatic Fibonacci retracement indicator. For instance, this is the region. This region is where the RSI indicator is, showing us currently. So the market came all the way from here and crashed down to this, to this zone, to this point, and then when it got to this point, you see that the RSI came this far below, and then it started to go up. It crosses the 35 zone, made a retracement back down here, came back to 35, another retracement, came back to 35, another retracement a little bit, and then starts to go up. It starts to go up. But it got to this point, and of course the market starts to make downward trend again. But this time around is going back up. You see, it will definitely get back up to 65 and above. So what you should do as a trader is to wait. You must understand the principle of waiting. Even as Christians, we should understand what it means to wait on God. So just like we wait on God as Christians for prayers to be answered, you also must understand that principle works in trading. You must learn the virtue of patience, the virtue of waiting. So you have to wait. Don't mind. If I were you, I would look for an indicator, an RSI indicator. You can download it from MQL5, where that RSI will have an alert, such that by the time the period, your RSI period gets to 65 here and it crosses back down, the alert will alert you that, look, this is the time to check your trade. So if you have an RSI indicator like mine that has an alert system, these arrows you see are alert systems. The moment my RSI gets to 65 and crosses back down on 65, my alert will alert me. It will alert me, and that's the time I want to check the market. Whatever I'm doing at that moment, I'm leaving it and getting back to my system. I don't want to stay in front of my computer all day. That's the purpose of the alert. So when I get the alert, I check how far the market has gone. I look at my Fibonacci retracement. The next key zone is right here. You see, this is the next key zone that the market is likely to break or unbreak. If eventually on this zone, my RSI says I should sell. I want to check, did this zone, was it broken? If it was broken, what is the potential for it to move upward? But that's not even the issue. As long as my RSI, conforms to the key zone here, if my RSI tells me to sell and I already reached this zone and now RSI is saying sell, I want to wait a little bit to see how far the RSI goes. And then once it does not break that key zone far up anymore, I'm going to enter for a sell. I'll enter for a sell. And I kid you not, as long as RSI has reached the peak and crosses back down to 65 and is telling you sell, your best bet is to sell. And let your exit, your take profit, be the next key zone on this Fibonacci. Look at the Fibonacci next key zone. It's right here at the bottom. Let your take profit be on this next key zone. Like I told you, I trade key levels. That's the next key level downward. So that will be my take profit. And my stop loss, because I like my trade to move, to have room to move, my stop loss is likely going to be around here. Around here. This will likely be my stop loss. So that's around how many pips of stop loss? Let's do the maths. That's around about around 50 plus stop loss. And then if you look at my profit is like times 3 of that stop loss, because if my entry price is 89.39 and my exit price is right here, my exit price is 88.43. If you do the math, that's over 100 pips, on one trade. So, and that's a lot of money depending on how much lot you use under your trade. So that's how to trade. So RSI is a very good indicator that you can use to profit on the Forex market or on the crypto market. I've used it and it has consistently given me profit. All you need to know is to learn how best to use it in combination to understanding the key levels on your chart. And with that, I tell you, you are on your way to success. You're on your way to profit. All right, guys. I said I was not going to make it so long. I'm probably already above the time I wanted to use, but it's okay. I hope you guys find the video useful. I'll see you another time. And till then, keep your fingers crossed. God bless you.